Lawmakers have 1 week to raise the debt limit in the U.S. They're expected to vote on this tomorrow, but what happens if they don't? Local financial professional Jeff Bangerter from Bangerter Financial Services joins us live in Roseville to explain what the debt ceiling is and how it's going to impact us all. Jeff, we were talking about this during break. They're likely going to vote for this, but we'll be in the same boat 2 months from now. So if we don't hit this debt limit, or if we go past this and they don't vote for it, this could have an impact not just on politicians, but a lot of people, my wallet, your wallet, everyone's wallet.
Yeah, and I think it's a little political theater because they get to this point, they take it right to the last hour on the thing, and then they pass it. But if they didn't, you would see the stock market sell off dramatically. You would see interest rates climb dramatically, which would affect all of our, your car payment, your, any cost to get a mortgage. All those things would go up. So it would be a very negative impact, negative credit rating for our country.
Yeah.
Maybe we're no longer the world reserve currency. There's a lot of impact if they don't do it.
And for people here locally, if they're trying to redo their kitchen or do some backyard projects and they need funding for that, that's where it really hurts. That's where you're going to see those increased rates for borrowing money. Social Security, this is talked about a lot. Could we miss payments on this too?
Social Security, the experts are kind of talking both sides of this because it is a separately funded program, right? So it's supposed to be unaffected by this. There's the trust fund that's there to pay for Social Security. But, if they don't pass this, I'd say all bets are off. It could affect 50 million people. I do think it's a little bit more, again, political theater than reality, but
the threat is there.
Our government's a little stranger than it's ever been, so who knows what will happen.
Exactly. Well put. Jeff, let's also talk about one of your big things is staying debt-free. Part of that, and for an economy like this we're going through right now, we talk about the debt limit and possibly not raising it. Plan for taxes. Explain that.
Yeah, so this is really the time of year where we're working with our clients on two fronts, right? One is if you're 72 or older, you have to take your required minimum distribution. So we're going through to figure out, well, how much is that? What's the best way to take it and out of which accounts? But for those folks that are not retired yet, well, even the retired ones that still have cash flow and income coming in, now's the time to take advantage of tax planning strategies. And so we would encourage you to not wait until after the end of the year,
right.
Take all your information to your CPA and have them give you the bad news. Now's the time to actually think about it and how can you mitigate your taxes for this year.
Exactly. Well, also, especially going to the holiday season, you might want to know before you spend more money, so it's the perfect time. Also, you're big on that 6 months emergency fund. Jeff, always great talking to you about this. Thanks for helping us put this into perspective with all the different aspects. Again, Congress could vote on this tomorrow, likely approve it, but we'll probably be talking about this in 2 months again.
I'm sure. Thank you, Richard. Appreciate
Jeff,
it.
thank you.